As part of its efforts to mobilize funds to tackle Nigeria's infrastructure challenge, the FMDQ OTC exchange listed the Pioneer Nigerian Infrastructure Debt Fund, powered by Chapel Hill Denham. Giving the special address at the event, the CEO of Chapel Hill Denham and Chief Investment Officer for the Nigerian Infrastructure Debt Fund, Mr. Bolaji Balogun, shared the essence of the funds to Nigeria.
Today's listing of the Chapel Hill Denham Nigeria Infrastructure Fund on the FMDQ Securities Exchange is a small but giant leap forward for Nigeria infrastructure financing and investing through its debt capital markets. NIDF, as you've heard, is the first and only domestic currency listed infrastructure debt fund across Africa and the Middle East, which is focused on mobilizing domestic savings, particularly pension funds, life insurance money from large corporates as well as large family office groups for investing in economically critical and financially viable infrastructure assets. The fund will make loans in Naira with terms of up to 10 to 15 years, and we've already written our first 2 loans, and 80% of the fund is already invested. In its initial offer, NIDF has issued 49.45 million units out of a program for 2 billion units that we've registered. And once this is listed today, we plan to issue more units and to grow and diversify the fund. This is not a one-off, and it is a start of a vehicle that will become very large and liquid.
Highlight of the event was the signing ceremony to signal a new chapter for infrastructure financing in the country. Mr. Bolaji Balogun, CEO Chapel Hill Denham, and Mr. Bola Onadele, CEO FMDQ OTC, speak further on how the Infrastructure Debt Fund will impact the Nigerian capital market and economy at large.
One of the key places in which you can protect contracts is to put things into public markets. And that's one of the reasons why we're listing this. If we did this in many other markets today, we may not list it. Yeah, public markets have the opportunity of ensuring that at the end of the day, contracts are respected and everybody, including, private parties, government-related parties, will behave properly.
This is highly significant not only to the debt capital market, but to Nigeria. Infrastructure is a major issue in Nigeria. You had some of the statistics. We're meant to spend $3 trillion over 30 years to cover the infrastructure that would deliver the sort of business climate and energy of Nigerians. You can think of power, transportation, you want to move around, people stand, at the bus stops. There's such a lot. And the timing, air transport, railway. You had Mr. Balogun's dream when his kids can wake up Saturday morning at 8 and go and visit their friends in Kano. And by 10 o'clock they're there and they return home same day. We all travel abroad and we see what infrastructure does. This country, Nigeria, I think all of us in it today need to dream of the potentials of this great economy, of this great country. I feel it, and I think as the commanding heights of this economy, the central bank, the Securities and Exchange Commission, now we've added the National Pension Commission, thanks to the Obasanjo administration. You look at the Nigerian Stock Exchange, then you bring FMDQ OTC Securities Exchange. We can sit together to actually think of innovative solutions. And debt is important. Debt is so important to infrastructure, to the development of any economy. We're not going to issue shares for Nigeria. So what will be going on in Nigeria is, the first step is people have ideas, they're going to raise debt before they think of increasing capital and expanding it to other people in public. And which is why the board of FMDQ and FMDQ, the visionaries behind FMDQ, the founding fathers, thought of FMDQ focusing on debt, to use it to unlock the potentials of this economy. Think of so many private companies in Nigeria that have no access to long-term capital. Now the pension fund has said those people too pension assets can go, but they must be under some form of governance, like an FMDQ process of their quotation of their bonds. We're working with the SEC on this, so these private companies, if you look at most infrastructure companies, they're private companies. So what the likes of Chapel Hill has done now is to sit there to take money from public in an organized way under the governance of the SEC and FMDQ, and then can go into those projects, be it public company or private company. And it's the same model we need for other entities that are not into infrastructure, but are warehousing the energy and entrepreneurship of Nigerians in this country. So this is major for debt capital market. It's the first, but it's not going to be the last. And we expect to have humongous funds on infrastructure in Nigeria. If we need to spend $3 trillion and foreign capital is going to come in, it has to come into a structured business model. And you know, every time I dream of this country, I hear government, I hear the central bank, I hear the SEC, I hear PENCOM, I see a country about to take a leap. And that's why we always appeal to the government to free some areas, some services that an infrastructure that can galvanize business in Nigeria. And they can support them with rebates if there's need to. Let the debt capital market do its work. Let the infrastructure or the company borrow at double digit today, even if it's double digit, okay? And the central bank can then have a rebate to pass to that entity by the time they are paying the coupon. So even if they raise 18, and we don't want them to borrow at 18, but market is 18 today based on monetary policy work and so many things, there's nothing we can do about that. But the central bank can then pass 10% to that entity, so the cost comes to 8. That is how we're going to move this country forward. So that central bank platform you see is a wonderful platform. And if you look at their vision, the vision of central bank is actually about economic development. And you can see the great work that's going on in central bank now in areas of the anchor program for agriculture and so many things. But we need to involve housing. We need to involve infrastructure. Housing touches every Nigerian. If Nigerians can borrow at 8% for their homes, it will be great. But how are they going to borrow at 8% if we don't have a program to pass the rebate? But we don't want central bank to lend the money. The debt capital market should do the work and raise the money so there can be discipline, there can be transparency, but the central bank can then support that rebate in an organized way. And we can have an idea of the figure that we're using to support the social economy in Nigeria.
The fund basically creates a platform to allow institutional as well as individual, high net worth individual investors who want to participate in an orderly manner in investing and financing infrastructure over a long term in debt, in local currency in Nigeria. It gives them access to a series of infrastructure investments. We've put together a world-class team that manages the fund. It includes the best of international as well as domestic markets in terms of the experience and the quality of the professionals involved. The investment team has over 120 years of infrastructure investing experience, not only in Nigeria but across emerging markets globally. It's basically providing long-term loans denominated in Naira, floating rate notes, which basically are offered at somewhere around 400 basis points over the 10-year FGN to providers or sponsors of infrastructure assets in Nigeria.
Tell us about the total size and what is being listed today, and why is it local currency? We'll look at.
So we've registered a 200 billion program, but the mechanism allows us to continue to issue, as we deploy the capital. So we never want to raise money, and we haven't deployed it very quickly. So we closed the fundraising a few weeks ago. Within a week, we deployed over 80% of the capital. 100% of the first fund will be fully deployed within the next 13 days and fully invested therefore. and we will start the next capital raising. Why local currency? The right currency in which to finance infrastructure anywhere is in local currency. And you only have to look at the debris around the privatization of Nigeria's power assets and the challenges we're having today, with the GENCOs and the DISCOs to understand why you shouldn't finance an infrastructure asset that is generating primarily local currency in anything other than in that local currency. If you purchased a power plant, let's say, and borrowed $200 million to do that 3 years ago, when you did that, you were owing 32 billion naira. Today, the value of that power plant hasn't changed, but you're owing 73 billion naira. What happened? And I think the evidence of that is plain to see. And the lesson that I will share with you is that if you look at the 24 economies that are all larger than Nigeria, all of them without exception are financing infrastructure primarily in their local currency and infrastructure debt in their local currency. And this is the only way that you bring stable, long-term financing to infrastructure over a long period of time. Nigeria's pension funds have provided the background and the platform for this, and we hope to work with them over the next few years.
You see, what the fund does is to take from surplus area into an area that requires expertise. If you are looking for the pension managers, all of them 20-something, to have investment officers who can take decisions on infrastructure, financial model that will run into 25, 30 years, that would be a hard sell. So what you want is the fund managers, the likes of Chapel Hill, Denham management, that they have the expertise to review such, to build such together. Then they can go to the pension managers to bring the money, take it into that fund, then they go to appraise where they're going to put such funds. It's a major thing that's happened today. It's significant in the history of Nigerian capital market. And I think what you've seen is a structured way of getting money from the pension funds into infrastructure sector. They've all been accused that giving the money to treasury bills and not into infrastructure. But they couldn't have done it directly because of the level of expertise that going into infrastructure requires. Analyzing the projects to be sure they're commercially viable. You can have an infrastructure that is not commercially viable due to some constraints. So we're calling on government to position its reforms, to position its regulation, to attract capital into Nigeria. Money is waiting to come to this great economy, the great population, great energy, great enterprise, and everyone is keen to do his best to ensure Nigeria tomorrow is great.
With the first tranche of 5 billion naira listed out of the total planned 200 billion naira fund, and 14 key institutional investors making commitments already, the prospect of attracting investments into infrastructure financing in Nigeria is gaining momentum. This is critical and is expected that it will activate other viable infrastructure funds for a country that needs to diversify and industrialize its economy.